a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about India ETFs, which were among the best performing emerging market ETFs. Saw a lot of interest from investors, and we are discussing the outlook now in view of Prime Minister Modi's third term. So these stocks and ETFs were on a wild ride last week. So first they surged on Monday when exit polls showed a big win for Modi, and then they sold off when it appeared that the party may fall short of the seats which were needed for a simple majority. Then they rebounded again when it became clear that Modi will be able to form a government, a coalition government. Then on Sunday, he was sworn in as India's Prime Minister for a third consecutive term. And during his last two terms, the economy has grown significantly. So that's why there's a lot of interest in Indian stocks. So some investors were concerned that it may be difficult for Modi to push through his agenda, and because of the loss of outright majority. But investors do like a business-friendly government in power. And from the composition of the cabinet, we saw that the BJP government, retained key cabinet ministers in the important portfolios, including external affairs, finance, home, defense, etc., which strongly suggests policy continuity and also suggests that BJP remains in control of the new coalition government as of now. And in fact, the results of the elections may expedite some of the reforms in the country. So let's take a look at why Indian stocks have been so hot and have seen so much interest from investors. So India is the fastest growing major economy in the world. During the last fiscal year, GDP grew 8.2%. This is the fiscal year which ended in March. Now then, because of China's concerns, many American companies are seeking to reduce their dependence on China. And India boasts a large and highly skilled labor force, and the government is also eager to attract more foreign investment. China's geopolitical tensions with the US and other Western allies have also encouraged large multinational companies to explore alternatives to China, and major companies, including Apple and Nvidia, have expanded their presence or partnerships in India recently. So Goldman Sachs predicts that India will become the world's second largest economy by 2075. And the economic growth is driven mainly by domestic consumption and investments. The rising middle class and their growing incomes will continue to boost the economy. So India recently took over China as the world's most populous country, and population is much younger than China. So that's a big demographic dividend for the country. And then the country is undergoing an impressive digital transformation thanks to a combination of factors, including growing internet penetration and availability of ultra-low cost smartphones and data plans, and other technological advancements, and also government's focus on building digital infrastructure. And as a result, the country has emerged as a world leader in mobile payment transactions, and the e-commerce market is also growing exponentially in the country. So India does lag behind China in terms of infrastructure developments, where the government has been making efforts to increase investments in those areas, and we should see improvements in the coming years. Let's take a look at three India ETFs. So this is the most popular India ETF, INDA. Uh, this is a market cap weighted ETF of large and mid-sized companies in India. 10.9 billion in assets, has seen significant inflows over the past year or so. 65 basis points expense ratio. To learn more about this ETF, you can go to the quote page on Zacks.com and you can read our research report articles, and using the link, you can go to iShares webpage for this ETF. And this is a market cap weighted ETF, as I mentioned. So Reliance, ICICI Bank, and Infosys, these companies, well-known companies, are among the top holdings, The second ETF that I'm highlighting is slightly different, and I like this because it invests in profitable Indian companies. So this is by Wisdom Tree, and I own it in the ETF investor portfolio that I manage. The ticker symbol is EBI. And these profitable Indian companies are then earnings weighted. And because of the focus on profitability, this ETF has outperformed INDA recently as well as over the long term. Slightly more expensive for this specialized weighting scheme and has 3.4 billion in assets. Again, let's go to the quote page on Zacks.com and go to Wisdom Tree webpage for the CTF. So this is what it does. Profitable Indian companies. They have some good research on India, so you can look at that. And if you look at the holdings, you will see similar holdings, but only profitable companies will be included in the index, and then the weighting will be according to the earnings. The third one I'm highlighting is small cap focused ETF. The small cap Indian companies which benefit from domestic growth, they did quite well lately. So this is ETF. This ETF is worth a look, but slightly pricey now. Has an expense ratio of 79 basis points and an AUM of 927 million currently. Again, you can go to the quote page on Zacks.com, and using the link, you will not be familiar with many of these companies. These are all small companies. So one thing I should caution that India ETFs do look a little expensive compared to broader emerging market indexes because they have been doing so well. But historically, India has commanded a nice valuation premium. So this is the forward PE ratio currently for the broader India ETF. Now, on the next slide, I have the comparative performance of these three ETFs and the S&P 500 index. So the earnings weighted EPI and the small cap ETF, those are up about 39% over the past year. The market cap weighted most popular ETF INDA is up about 28%. And the S&P 500 index is up about 25% over the same period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.